So I'm back in Philly, fresh off a great weekend in Scottsdale. It was awesome to spend a few days in the retail store, meet some great clients, and introduced our pre-owned watches to the Scottsdale market. It certainly beat hanging out in a snowstorm in Philly. Now, as we're starting to get reports for December, we are seeing some trends in the market globally. Watch Charts released its monthly report of the pre-owned watch trends, which showed the first monthly increase since April 2023. Now, December numbers always seem to be a bit stronger, so this could just be seasonality, or with increased demand, it could be more signs that we may be seeing the bottom of the market. Richemont reported a 12.6% double-digit growth with specific strength in Asia. They showed dramatic strength in Cartier, and despite the weakness in Europe, the US and Asian markets seem to be holding up. Now, this is especially surprising with the drop in pre-owned prices, which should take out a number of flippers who are buying just to sell. So to see an increase in demand, even with the number of flippers out, indicates a very strong strength in demand. Now, Swatch Group, interestingly enough, reported a miss in total sales and actually blamed disappointing sales in Asia. LVMH is reporting final results today, but their 9-month numbers were very strong. What we're finding is a huge amount of the demand is driven by Asia and the US. Shortages of new goods have fueled the secondary market for a number of years, and the Asian market tends to lead the world. Chinese tourists really started the demand explosion, and if they get back to traveling and shopping, it can dramatically drive demand. Now, China's economy and stock market are going through a very volatile period, having dropped dramatically over the past few weeks. There's also a possibility of a financial intervention to prop up the markets, so this will be something we'll have to keep an eye on. Now, the interesting other development is in the currency market. For a number of years, we saw a very stable currency market. But over the past year or two, we've seen much more volatility in the market. We've seen the dollar weaken significantly over the past year, specifically against the Swiss franc. Now, some brands have already adjusted prices in the US, but many of the big brands have held off. As the Swiss franc now hit 1.16 to the dollar, it means that US dollar-priced watches are at least 10% cheaper than they were 9 months ago based on foreign currency. Tourist demand and a variance in pricing parity also tend to drive this demand. I expect this will continue over the next few months. LVMH watch days will arrive next week, and we expect to see some new introductions and more direction on the relaunch of Daniel Roth. 2024 will be a very interesting year. We have a number of economic issues going on in the market, multiple wars, economic stagnation, and an election year in the US. And this will typically make for some very volatile months. But overall, I expect the market to start to turn back around in the second half of the year. New good demand is not going away. Despite everything you hear on the internet, certain watches may be easier to get, but I don't expect any flood of new goods sitting on the shelf anytime soon. I do think the days of second-tier brands trading over retail are behind us, but I expect the best pieces will still remain oversold. I expect the secondary market will get back to the normalcy that was 2019 to 2021. Strong demand, but back to days when the pre-owned market is less about flipping Nautiluses and APs and more a place where you can get exceptional watches that are no longer available in the primary market, but also a great place where you can show great value. Patek to me is already there. There are great opportunities to buy high complication or collectible watches that are harder to get at retail. Retail prices will again rise this year, and secondary market prices are basically back to where they were trading in 2021. We need to stop looking at what prices were 12 months ago and really look back to where they were 36 months ago and find opportunities to make some great value buys in 2024.